We'll take a segue over to the car carriers, and correct me if I'm wrong, but I've seen that you're quite optimistic on that sector. And I don't know if that's a contrarian view or it's just dependent on the companies and backlog and things coming out.
No, I think we're a little bit selective. We really like Wallenius Wilhelmsen. I think that's I think the Wilhelmsen family should take that company private. I don't think they will do it necessarily, but I think it would make sense for them to just take it private and avoid all the comments from analysts like myself blaming them for not doing this and doing that, and just avoid the hassle. Take it private. They've generated again. I mean, they paid $1 billion of dividends for last or 10. I mean, it's exceptional. The economics and the cash flows they're generating. It's 80% cash conversion from EBITDA. Fantastic situation, but of course rates are coming down. So we're more neutral on Höegh. It's hard to be overly bearish on a company that is still trading at 2-3 times EBITDA, essentially debt free. Again, a company that was in trouble 4 or 5 years ago. But of course, the thing is, it's quite interesting because you have two companies that have been navigating through an upcycle in two different ways. Halto, they were chasing the top dollar. They did that beautifully. Investors that got in early have made 10 times the money almost, including dividends, or at least at some point they had. And now they're seeing that maybe reverse a little bit and struggle a little bit because they more shorter-term contracts, they have more spot cargo. Wallenius Wilhelmsen was kind of a slower moving animal. They had their long-term contracts, long-term relations. They didn't go from, charging clients $40 to $70 overnight. So it's been slower, it's been taking longer, but now they're there. And of course, then as well, you have a company, 10,000 employees. It's a big logistics company, long-term relationships. I don't think they will see massive contract rearrangements as the market is, now scared of. I don't think they will do stupid things with their, $1.5 billion cash position. So I just think then from a valuation perspective, even though I understand the momentum and I understand that estimates might be peaking, it's just again hard to say, okay, it's a company with 10,000 employees trading at 2.5 times EBITDA. The debt levels are down by $2 billion from where it has been. They can pay out more. Maybe they should pay out more. But then from just from a fundamental perspective, and that's of course the challenge of being a shipping equity analyst versus a normal equity analyst. It's different. It's a bit different perspective often.
Yeah, I think that was exactly the point in an interview I heard. Lasse Kristoffersen, the CEO of Wallenius, said that he didn't really want the volatile shipping label on his company because he said this is more like a logistical company. Maybe just emphasizing your point. But when you're also talking about taking it private, in that argument, do you have that holding company in that argument as well? Because that always seems to, get people going and discussions going.
You have the holding company at the 50% discount to NAV, right? So does it make sense to keep it there? But I mean, VVI is they're doing their stuff, so that company can remain listed. But maybe VVI should. I mean, it's a company. The float in Wallenius Wilhelmsen today is also quite limited, right? Because you have the Swedish Wallenius family there. So between them, they own more than 2/3 of the company. So the float is quite limited. So it wouldn't really take that much to actually take it private from their side. But I mean, I don't think they will do that. But I think it would certainly possibly make their lives easier to avoid, market talk and opinions on cash flows, etc.
Any comments on China's car production, what it implies? I mean, it's been a huge driver, of course.
It's been the main driver, right? And if you go back 40 years and look at what Japan did, this can just continue. It looks like this is something they just decided that this is how we're gonna, take on the Western car industry. And of course, they're selling these cars much cheaper in China. So for them to handle tariffs, and the thing with Chinese car exports, there's a lot of focus on European tariffs, US tariffs. There's no Chinese EV going to the US. There's Chinese EVs going to Europe, but that's not the growth, right? That's not the target market anymore. It's been stalling essentially Chinese EV growth to Europe. So Chinese EVs, they're going everywhere else. They're going to Latin America, they're going to Southeast Asia, they're going to SHRM, they're going to go to Africa essentially. So and that's important because basically the Chinese EVs are going to countries without any domestic automotive industry. So it doesn't threaten Brazil's automotive production because there is no in Brazil. So for them to have access, and I actually had that was an interesting conversation I had with an investor who was in Mexico, and he said, this was probably 2 years ago, why are these car carrier names trading? And this was when they were at even lower valuations. Why are they trading so low? What are the Norwegians not seeing? And I told them, they don't really see the Chinese EV boom as sustainable, because we sit here in Norway and we see that there's so many of them and they're unsold, and they have their showrooms at Karl Johan, the main street, and no one is buying them, and the automotive journalists are saying they're bad quality. So, and he said, okay, so that's it. Then I'm going to buy Höegh Autoliners, because I sit in Mexico and I see how they love these high quality, relatively high quality, high tech EVs. That's great, and so Norway is not a good predictor of where Chinese EV demand is going to be. So if that's the downside, then fine. And that was in a way a good conclusion.